Hey everybody, Mark Yagi. Hope you're doing well. I know it's been a minute or seemingly, but a few weeks ago I put out a video and I had to do it on basically on my website because the powers that be didn't like the video, let's just say that. So that video, we started to talk about how this new character that I'm introducing right now, he's called Juicy Joe. And Juicy Joe is a hypothetical character, right? That does trades using covered calls, right? That's primarily his job. He likes to do trades using covered calls. Now, none of this is financial advice. This is education. But Juicy Joe did a trade on AppLovin a few weeks ago, and he hypothetically is in this trade now. And so I'm going to show you this trade. Now, AppLovin, looking at this chart, you could see it was the number one performing stock of all the major stocks last year. And that's probably for good reason. They're in this cool market where they make apps and they have an app ecosystem and they help developers. But if you look at this beautiful chart, it just goes from lower left to upper right. That's what you want stock charts to look like most of the time. And this stock is no different. Now, it went through a cup and handle formation. So I told Juicy Joe, hey, Juicy Joe, maybe you can get an early entry. If you go back and watch that video, he did buy that stock. And so I will show you Juicy Joe's portfolio now so that you can kind of get an idea. Now, if you're new to the channel, you know that what we like to do here is kind of show hypothetical trades. This is the actual spot here at 428, and I think Juicy Joe entered the trade around 418 or I think it was 418, and he sold at that time the covered calls, the 420 covered calls. Now let me show you what's happened since then. That was about 3 weeks ago or so. So I'm going to show you all the trades right here. So here's a little spreadsheet that I put together from the output of Juicy Joe's transactions on his TradeStation account. And so what Juicy Joe did was he bought 200 shares at 418.47, and that's the amount that he spent on that. And then he sold against those covered calls, and that basically just means, or Juicy Joe gave somebody else the right to buy his position at the 420 level. You can see it says covered calls or calls at 420, and those expired, just a few. It was on 819, and then Juicy Joe had those expire on 829. So he gave somebody else the right to buy his calls at 420, and he got $13.30 for those, or $2,600. So that's there. But then you have to close those out, right? There's no free lunch. You always have to buy them back. And if they go above strike price, well, that's okay. As long as it keeps going up, that's a cool thing. And that's what Juicy Joe liked at that time. He liked to buy this stock because he thought it was going up. He thought it was at the right spot on the chart, good fundamentals and all that stuff. So over the strike price, he had to pay back what's called intrinsic value. Now he got juice because he was out of the money on the strike price, and that's extrinsic value, but he had to pay back whatever intrinsic value was left. And you can see there's the price that he paid back. And so on this trade, he got the juice, but he also had to pay back some intrinsic value. Well, that's okay because that's working capital, right? A lot of people don't realize that you got to have working capital in any business. And so he had to spend a little bit of working capital. Yes, it does increase the basis in your stock price. And yes, if the stock goes down after expend that working capital, it could create what's called a whipsaw. But in this case, Juicy Joe did this trade. And then the next week, you can see at the end of the week, he closed that trade out. And then he went out and sold these 825s, the August 25th 435s. Okay, so the stock is moving up for him, and the stock is going up. So he got in 51.80, and he had to spend $10,000 because it was over the 435 strike price. Well, you know what? That's okay. By the way, if you're wondering how the heck you can make money on in-the-money calls, I'm showing you the exact playbook that Juicy Joe used back then. And he may even use it in the future, right? So you can see here he's taken 52.82 in working capital and spent more. And then he opened up another trade here on 829, got 34.51. Some of that was juice and some of that was intrinsic value. We're in this for the juice. That's the income. And so he got into his account $6,900, and that trade is still open. This is a screenshot of Juicy Joe's account. And so you can see the screenshot shows two market values here. One is for these short calls and the other one is for these long positions, these 200 shares. So let's break it down with the summary here. The summary says 83,694 is what he spent, and then his base position, what current market value is right here, 99,898. So we put that there for him. And then the non-base position is $1,800. That's when you add all of these up, okay? That's the net of the non-base positions, these two closed and this unrealized position. And then you have to take the value of, what if you liquidated it right now? Well, Juicy Joe would have to pay $86.60 because it's over the strike price by a little bit more. And so when you net all of that out, this current gain or loss over the last 3 weeks for Juicy Joe has been $5,716, right? Or $15, I guess it says there, right? So you could see that 86.60, by the way, is right there. So he's already doing really well. He's on this hypothetical trade that really doesn't exist. It's $5,715 that he's made on this much invested in 3 weeks. So what are the summaries that you can take away from this? Well, I'm an in-the-money guy. I talk about doing in-the-money calls all the time. And he has done. He's been in the money ever since he got into that stock. At 418, the stock has really gone up. And a lot of people just don't believe that you can make money on in-the-money calls. And why do I talk about in-the-money calls to hypothetical people? I talk about them because in-the-money gives you protection on the downside. So if the stock goes down, the in-the-money amount protects. We like protection. It also is a higher percentage probability chance that it's going to close in the money. That's what the delta means, and we're not getting into delta right now, but you want more certainty when you're in the stock market, and you want to create income. Now, there's two different mentalities of thinking about these trades. There's the way almost everybody thinks about them. Buy low, sell high, right? You buy and hold something, and if it goes up, great. That's you made your money. But a lot of times stocks don't go up. If they don't go up, then you have the other mentality that if you're selling covered calls, you're doing a covered call trade or even a spread trade, then you're getting money no matter what. You're getting income. You're getting juice no matter what. And so that's what I tell Juicy Joe is like, dude, you can get income if you buy a stock and you sell calls against it, even if they're in the money. In fact, in the money gives you a higher chance, higher probability that it closes in the money, which means you collect all of the juice that you wanted in the trade. The problem is most people confuse the two methodologies, the two mentalities. The mentality of the first one is buy and hold and hope it goes up, right? That doesn't mix very well with an income strategy. Here's how I look at it. You go out, you buy a house for $300,000 and you find a renter, and let's say the renter comes in and he gives you $3,000 a month. Well, that's pretty awesome. Do you care that the house went from $300,000 to $315,000 or back down to $285,000? As long as you keep the renter in there, because it was a rental house. It wasn't a buy and flip, right? Like on those home and garden shows. If it were a buy and flip, then you wouldn't care about the rental. You wouldn't put a long-term tenant in there. And so many people get confused by, well, what happens if the stock shoots up? Awesome. Awesome. I want the stock to shoot up, right? Because if it shoots up, then somebody like Juicy Joe hypothetically could make a bunch of money, just like I showed you. By the way, this stock has gone from 418 on 819, right, to today is September 4th, and it's at $500, right around that. So this stock has done nothing but shoot up. So you can't tell me that in the money doesn't work. Nobody talks about it though, really. And nobody really has a system for going deep on in the money. And so that's what I teach people like Juicy Joe to do over on my website is we teach people how to create reliable income from the market. This is the app trade. It's going very well. I thought maybe you'd want to see how well he's doing on it. So that's why I'm introducing this character so you can follow along with him as he does these hypothetical trades, which he may or may not have done. Now, this is for educational purposes. This is not financial advice. This is so that we can show you that there's a trading system out there that maybe you have or haven't been taught, right? I don't want you to go out and do these things at all. I never want you to do these trades. I want you to see what Juicy Joe does and learn from them. That's the whole point of these trades. I hope you're picking up what I'm putting down. Thanks for joining me. If you want to see these trades more in depth, there's a link down below to get to our website. So if you want to join our newsletter, you can join our email and we'll send them right to your inbox, and then you'll see these hypothetical trades. So I need to put up a legal disclosure here. I am not a financial advisor. This video is for educational purposes only. And this is entertainment and it's not financial advice. Always do your own research before making financial decisions, and please be careful.